All right, everyone, thank you for answering the question. I'm going to leave the poll up for about 20 more seconds, then we'll jump in and get started. All right, everyone, good morning and good afternoon to those who are on any coast besides Pacific Standard Time. My name is Phyllis Johnson. I'm the owner and CEO of PKJ Consulting and PKJ Courses, and I'm excited to do this webinar with you guys today to get ready for tax season. Just some housekeeping rules. I want to just say thank you to those who were on the webinar yesterday and those who signed up for the one tomorrow. I came up with this idea to do this webinar because as a tax professional and a bookkeeper and accountant, a lot of times what happens is people are getting ready for tax season during tax season, which is not the best time to do so because you can't make any big decisions when tax season has already started. So I want to present this webinar for you guys to hopefully help you get ready. We have 2 more weeks left in the year, so it's not too late. So we're going to go through a brief introduction of myself for those who don't know me. We'll go through some record keeping and document items to do to get ready, key business tax write-offs. We're going to talk about grants and loans, 2021 key tax changes, the end of year checklist, some tips, and next steps and questions. So this webinar is geared towards more small business owners and entrepreneurs, but I am also going to go over some items for individuals because even if you have a business, your individual tax return will also be affected. Now, feel free to ask any questions in the chat. If we have some time, I will, in the question and polls section, if I have some time, I will go over them and also give you different options on how to reach out to me in the future. So as stated before, my name is Phyllis Johnson. I'm the CEO and owner of PKJ Consulting. We are an accounting and consulting services company for entrepreneurs and small business owners. I'm also the owner of PKJ Courses, which provides 1 hour or less courses for entrepreneurs and individuals who are too busy to take a 6-week or 6-month course and really just want to learn a specific item. I'm located in Las Vegas, Nevada. I have my bachelor's degree in business administration, accounting, and finance from Pepperdine University, and an MBA with an emphasis in entrepreneurship management from UNLV. In addition to that, I do taxes for individuals, entrepreneurs, and business owners for over 20 years, including 1040s, Schedule Cs, 1065s, 990s, 1120Ss, and 1120Cs. And just a fun fact for you, my mother worked at the IRS for 30 years, and tomorrow would have been her 75th birthday. So even as a kid, I was at the IRS being an intern and learning how to do taxes by hand. In addition to that, I'm authorized IRS tax provider. And so because of that, I'm offered information before it's released to the public. One of those items I just got literally an hour ago. So I popped it into the presentation. It's something that's going to help individuals with their tax returns. So it's actually good news. And I'm also QuickBooks Online Elite Pro Advisor. So record keeping and documents. This is one of the key items that we need to do as you get ready for the tax season. And here are some of the forms that you want to make sure that you're keeping track of. Any W-2s from your employers, any form 1099. So if it says 1099 on it, you want to make sure to keep it. Your 1099-K, 1099 miscellaneous, your 1099 interest income form. And you want to either have a Google Drive, you want to upload that to your Dropbox, you want to put it in a folder if you work one-on-one with a tax professional, or if you have a tax professional who uses a software like myself, where I use TaxDome, I allow my clients to upload their documents whenever they get them throughout the year so that when it is tax season, they're not searching around for them and I can just pull their information. In addition to that, if you are a business owner, you want to make sure to have your profit and loss, your financial statements ready to go. Now, this is a key piece. A lot of business owners, they wait until tax season to get their financials done. That is the worst thing that you could do as a business owner. And the reason for that is this: if you don't know what your profit and loss is, how much money you made, how much money you spent, it's impossible to make decisions for your 2021 tax year and 2022. So a good example of that is yesterday I was working with a client, and throughout this whole month, I'm meeting with my clients that I do tax returns for and giving them tax advice on how to lower their tax liability, or if they're trying to purchase a house, making sure to in advance structure their profit and loss so that they can do so. So for this client, I actually just cut a $50,000 a $50,000 paycheck to him as an S corp, because his net income is really, really high. He did very well this year. And so imagine if we would have waited till January to do his financials, and then he saw what his net income was. And so instead of having $50,000 to go enjoy the rest of this year with, he would have to give that money to the IRS. And I don't know about you guys, I would rather have $50,000 in my pocket. So it's very important that you don't wait to tax season to start doing that. The other reason is people will say, oh, well, I just put all my receipts together, give them to my bookkeeper, tax person, CPA, H&R Block, whoever. Here's some information for you guys. Especially in this day and age, if you're coming with a stack of receipts and you're expecting that person to calculate every single item, yes, they are supposed to, but if you aren't keeping track on yourself, there's no way for you to verify that information. So let's just say that bookkeeper who's super overwhelmed miscalculates all the receipts that you give them. They use that to go into your tax return. 5 years from now, unfortunately, the IRS audits you and they find this huge discrepancy. They're not going to bill that bookkeeper, they're going to bill you, because it's your responsibility to make sure that information is accurate. So it's not too late to make sure you get those financials in order. It's actually very important. The other item is getting your K-1. So if you are in a partnership with another company or another person, if you don't know what a K-1 is, that's very critical. That's a document that you need before you can actually do your personal tax return. And then virtual currency transactions. Now, I'm going to talk about this a little bit later for those who do Bitcoin, Dogecoin, Ethereum, and all these different new coins this year. If you haven't, you definitely want to make sure to report it, and I will tell you guys why a little bit later. So here's some documents that you're going to receive in January of 2021, if they are applicable to you. The first one is the letter 6419, which gives you information on that total advanced child tax credit. So you're going to get that document in January. You want to keep it to file your tax return or give it to your tax professional. The letter 6475, that's going to tell you about those stimulus payments you received, especially that third one. So make sure you want to keep that as well. And then your Form 1095 health insurance. So we know on a federal level, it's not required for you to have health insurance. However, there are still some states that require you to have health insurance. In addition to that, there are some premium people who are using like a marketplace. You can get refunded if you overpaid, or unfortunately, if you didn't pay enough, you would have to pay a little bit on that. So these are just documents to look out for in January. Don't put stuff in spam and don't throw any of your mail away. Gather those documents, put them in a secure place, and make sure you have them ready to go. So I want to now go through some business tax write-offs. Now, this is a very important thing I'm going to say. You need to first understand the structure of your business. Are you a sole proprietor? Are you an LLC? Are you an S Corp? Are you a C Corp? Are you a partnership? That is going to determine how these tax write-offs apply to you. So even if you are an independent contractor and you're getting that 1099, this applies to you. The other thing that I want to say is when it comes to tax season, a lot of times people will say, oh, my friend told me I can write off this, or my cousin, or my uncle, or my therapist. I had somebody tell me that their astrologist told me about a tax write-off. And my response is, and always will be, does that person have the exact same business structure as you? Do they make the exact same money as you? Are they living in your household? Do they have the exact same number of kids? You get my point. The reason I say that is unless that person has the exact same situation, it doesn't always apply to them. So please don't get advice always from your cousin, uncle, random person who's not a tax professional, because they don't know all the new tax rules. And so if you ended up filing your taxes based on only their information, you could be filing your taxes wrong. And when you get that tax bill, which I have experienced from a lot of different clients over the years, that person is nowhere to be found. So just keep that in mind as I go through this list. So the first one is the home office, and that is the most critical one. As we know, a lot of us are now working from home. Now I'm going to go through a little bit of the two different types. So if you are a W-2 employee, unfortunately, this tax write-off does not apply to you. But what I will say is this: if you're a W-2 employee working from home, when I was a W-2 employee, I specifically spoke with my supervisor about, hey, I'm working from home. Can you reimburse me for my internet and my cell phone expenses? And he did, and actually got them to do a company-wide situation where we were reimbursing people for internet and cell phone write-offs. So if that is your situation and you're paying for everything out of pocket, you can't get the money back unless you're a certain type of professional with a W-2. So it doesn't hurt to ask. The worst they can say is no, but we are spending our own money out of our own pocket. Now, if you actually have a business, you can write off a portion of your rent or your mortgage and a portion of your utilities for your home office. So if you have a 10,000 square foot home, lucky you, and your home office is 1,000 square feet, that's 10%. You can write off 10% of your rent and mortgage. You can also write off a portion of your utilities. If you are a product-based business and you have product in your garage, you can also write a portion of that off as well. Now, on the flip side, you can write off anything that you purchase for your home office. And I mean anything. So for example, all this here that you guys see, the picture behind me, the orange, the get it done checklist, those are tax write-offs because a lot of us spend time on Zoom and we want a professional background. So anything that you buy for your home office, computers, laptops, desks, supplies, pens, pencils, water jugs, all of those things are 100% tax write-offs. Now, what you want to do and must do, make sure you are using your business accounts to purchase those items, because if, for example, you are ever audited, which does happen, the IRS that's one of the biggest things they want to make sure is that you're not just purchasing like supplies to then give to your kid to take to school and writing it off on your business. So you want to make sure to keep those things separate. The next one is automobile expenses. So as we know, we're not driving our car that much. And this is another huge write-off that people don't understand. And you do want to talk to your tax professional specifically about your situation. But in essence, if you have a business where it's required for you to drive a lot, so if you're a salesperson or you own a trucking company or you are a consultant, and you, even in today's situation, you're seeing a lot of people face to face, you can purchase a car in your business name, write off everything. So 100% of everything, right? If you are a work from home person and you're running your business online, it's not realistic unless you have 2 or 3, 4 cars that your car use is 100% for your business, unless you just never leave the house only to go to Walmart to buy supplies. So it's unrealistic. And so you have to keep that in mind. What you want to do is make sure you keep track of your mileage for your business. If you're going to see clients, you can write that off. If you're going to get meals for your business, so anything related to your business is a tax write-off if you don't have to have a car for your business. The next item is insurance. So any business insurance you get. So health insurance, errors and omission insurance, general insurance, liability insurance, all those items, tax write-offs for your business. Interest expense. If you have a loan or a credit card, that's also a tax write-off for your business. So now I'm saying business, but also if you are a 1099 independent contractor, these also apply to you. Just want to make that caveat. If you have a remote office, 100% write-off for your office rent. Travel. So this is the one that also people get stuck on. And so the way travel works is we are now, in holiday season. So I'll give you a few examples and hopefully it makes sense to you guys. Feel free to ask any questions if you have any questions about this one. So the way travel works is this. I am originally from California. So if anyone's from the Bay Area, hello. And so I had a client in Northern California who would fly me out there about every 3 months, and I would directly work in their office for the full day. Now, because I was from Oakland, they were in San Francisco and they were paying 100%. It's 100% tax write-off. So they pay for my flight, but any food or anything else that I incurred, 100% write-off. Now, of course, at nighttime, I went to go see my family. it's still included as a travel expense. I wouldn't have flown up there if they hadn't paid. On the flip side, if I go see my family, right, and I'm going to see them for the holidays, it's not a write-off. But if I do go see a client while I am up there, so let's just say hypothetically, I fly up there, I go see a client for the entire Tuesday I'm in town, everything I do for that day is a write-off. So you want to keep track in that way. If you're going somewhere fun, for example, let's say you run a marketing company and there's a cruise for marketing people and everyone's going to be doing marketing conversations, meetings, and how to increase your business, but it's a cruise, you're going to have fun, but you wouldn't have went if it wasn't for that seminar, it's a tax write-off. So you just want to make sure that you're keeping track of that information. Make sure you keep track of your receipts. Meals and travel and home office, those are number 3 things that, the key things that will get you audited. So just make sure you're keeping track of that information. Contractors. So if you hire independent contractors, whether they are in the United States or international, tax write-off. If you have independent contractors in the United States, please make sure to get a W-9 for them in the next couple of weeks. It is legally required for you to give them a 1099 if you paid them over $600. Even if you did not, just make it a practice. Just like when you onboard a client, or if you start a W-2 job, you fill out all this documentation before they give you a paycheck. Make it part of your practice to do so, because I've seen too many people get these notices from the IRS and they have to pay the IRS money for not filing a 1099 because they hired a friend to do some business with them, and then the relationship goes bad, and then now they're reaching out to the IRS because they didn't get that document. Depreciation, if you buy an asset for your business, so such as a car, a very expensive piece of equipment, if you have a brick and mortar, you can depreciate that over the life of the asset. Internet, computer, and software is all a tax write-off. And then also, sorry, let me go back. Also, supplies are also a tax write-off. And then legal professional fees. So if you hire an accountant, a lawyer, a CPA, an IT person, these are all write-offs. Now, yes, I understand those people can cost money, but personally, if you hire a bookkeeper or accountant for a couple $100 here and there, and they save you thousands of dollars in the long run, it's definitely worth it. I'll give you guys another example. I have a client who 2 weeks ago, we were talking about how to keep him from owing $1 million to the IRS. Now, that's way outside of my thought process, but he has myself, he has a CPA, a financial advisor, another accountant. He has a whole bunch of people on his team. He pays us to make sure that instead of at tax season, he's getting hit with this $1 million bill, which is insane to even say that out loud. We are able to structure some stuff before the end of the year to lower his tax liability. So imagine it's a great thing to be in that situation. We are, as business owners, are always trying to not owe money, but the goal is to make enough money to the point where you can structure your business so that you don't have to owe. All right, so now let's talk about 2021 grants and loans and how it's going to affect you with your tax return. The first one is that famous EIDL, the COVID Economic Injury Disaster Loan Program. So what this allowed for was up to $2 million and a 3.75 interest expense for 30 years, which is a great opportunity for your small business. The EIDL loan and targeted advance applications are going to be accepted until December 31st and will continually to be processed after this date until funds are exhausted. So I work with someone who works with the SBA very closely. There are still millions of dollars still available. So if you have not applied, apply. The other thing is that the borrowers can request an increase of up to their maximum eligible loan amount for up to 2 years after the loan origination date or until funds are exhausted, whichever is the soonest. So what that means is, for those of you who've already got that SBA loan, if you haven't already, go into your tax portal, go into that SBA portal and see if there's an offer for you to increase your loan. So you just slide that thing over to the right and start that process to get an increase in funding. So it's a very great opportunity. If you have not already done so, I would say as soon as we got that call, please do so. if you need it, of course. If you don't, then don't. Targeted EIDL advance. So this was up to $15,000 for low income communities with more than a 30% reduction in their revenue. And the great thing about this one is it doesn't need to be repaid. So if you receive that email from the SBA, take a moment to go look and see if you check your spam, or even reach out to the person who was working with you to approve your EIDL to see if you qualify, because there's still funds in that program as well. Now, here's the key. Something that I learned recently. One of my clients from California, they live in Santa Rosa or Santa Clara, reached out to me to see if they qualified. And I, of course, said no, because you're in Northern California and it's extremely expensive there. So I didn't think they would qualify as low income community. I went on the website and typed in their zip code and they qualified. So even if you live in California, New York, and some of these high income places that would technically be high income in other parts of the United States, you can still qualify. For those who are from California, even if you make six figures, you know, it's still somewhat considered low income in certain areas. So don't hesitate to go in there, because it's up to $15,000 that you don't have to repay. The other one, my favorite topic of the last 2 years, the PPP Payroll Protection Plan, the loan forgiveness. Now, if you do not apply for forgiveness within 10 months after the last day of the covered period, you need to repay it back. Here's the thing about these PPP loans that I'm sure we have all heard about in the last recent year, of these people going to jail and people getting indicted for fraud and all of this other stuff. If you got this PPP loan, or you know someone who did illegally, I am not going to judge. What I'm going to say is, number one, if you're one of those people who, for whatever reason, decide that they wanted to steal the money, get the money, and post everything that they buy on social media, don't. That's the way you're getting caught up. You know, people are getting these funds and then posting cars and luxury trips, Lamborghinis, and all this crazy stuff on the internet, when yesterday they were driving a Honda Accord. It makes 0% sense. You do realize, like, IRS agents have social media, people report people, people get actually benefits from reporting people. So please, if you got it illegally, delete that. Number two, and more importantly, pay it back. You can actually pay back the loan. So if you got it and you're one of those people who didn't need it, pay it back so that you don't have to. If you haven't started paying it back and you think the IRS won't catch you, they will. You had to give your personal information to get these loans. So no matter what you do, at some point, every single time, once the IRS gets caught up with everything, every time you file a tax return, they will take your refund until the end of eternity. So get on a plan, pay it back. I believe you have 2+ years to pay this back. So make payments to keep yourself from getting thrown in jail. So now I want to talk about some key tax changes for individuals, and then I'll talk about self-employed and business owners. The first one is the child tax credit. So this was increased for 2021 for up to $3,000 for families with kids under 17 and under, with an extra $600 for children under 6. So if you had kids and you qualified, you received money in your bank account, I believe starting in July, every single month, and there's another disbursement this month for those who haven't received it. Here's the funds, here's the key fact. If you receive in January, you're gonna get a form, and if you receive too much money, unfortunately, you have to pay it back. It was an advance on something that you're gonna claim on your tax form. So it didn't just give you extra money. The IRS was just giving you money before you could claim it on your tax return. So just keep that in mind. If you got too much, you will have to pay it back. If you didn't get anything, you will be able to claim it. Now, for people who are divorced and you get to claim the kit every other year, you do want to reach out to your tax professional, because there's certain key caveats for each part of it that I am still learning on, because it's a lot and they're trying to figure out if one person claimed the kid for 1 year and got the money, but then the other person claims next year. There is some fun, fuzzy stuff for that, but everyone should be balanced out. Recovery rebate credit. So that third stimulus payment that you received in 2021, you will get a document and you need to put that on your tax return. If you did not receive that money, right? If you were supposed to, you can get a credit on your tax return. The same thing as required for 2020 tax return. So If you haven't filed your 2020 tax return, not too late to do so, it's never too late to do so, and you didn't get that first or second stimulus payment, you need to file it so you can get that credit and get your money from that. The third one is going to go on your 2021 tax return. And there's discussion of a possible fourth stimulus payment, probably not before the end of this year. That'll probably apply for 2022, but I just wanted to include that in the presentation. And oh, one very important key note, because this was the #1 reason why people did not get their tax refunds on time in 2020. If you do not tell your tax professional that you got this recovery rebate credit, or you're telling them you don't know, or you reported the incorrect number, the IRS has the information. So if you did not get your tax refund on time, 100%, but not 100%, but a lot of the letters that my clients received last year was because they incorrectly reported that information to me, which got on their tax return. The IRS is going to try to match it up, and they will send you a bill if you do not put the right information. So if you got $2,000 and you don't put that in there, you will get a bill for that, plus interest expense and fees for not putting that information in there. So just make sure to file that correctly so your tax refund isn't held up. Student loan. If you're one of those lucky people who have their student loans canceled or forgiven in 2021, congratulations, it's no longer considered taxable income. So in the past, if you had it forgiven or canceled, you have to put on your tax return and pay taxes on it. But now for this year, you don't have to do that. So make sure that you put that information on there, but you're not going to pay taxes. Unemployment compensation. So for 2020, in the middle of our tax season, they changed the law so that the first $10,200 was exempt. Unfortunately, for 2021, this is not the case as of today. So as we know, tax season changes constantly because of everything that's going on. So this could change, but right now it's 100% fully taxable. So you want to keep that in mind. If you did get unemployment in 2021, if you did not have taxes already taken out, you're going to be taxed on that 100% for your tax. So this is the one I want to talk about. I just found out like 2 hours ago. So for individuals, previously, if you itemize deductions, you know that you could claim any charitable contributions for Goodwill, Salvation Army. You could put that as an itemized deduction. If you only did standard deductions, feel free to reach out to me if you don't know the difference between the two. You could donate everything you wanted to, but you could not write it off anywhere. They just created a new tax law that if you do have just a regular 1040 and you do charity, no matter whether you're itemizing or standardized, you can deduct up to $300 on your tax return and $600 as a joint filer. So as we're in the holiday season, feel free to donate so that you can write that off on your tax return. And then cryptocurrency. So this is a big one. So if any of you guys are now investing in Bitcoin, Ethereum, all these other fun ones, you need to report that on your tax return this year. I know people started doing this probably 2019, 2020, became a big thing, and people didn't report it, but the IRS has actually hired an agency, a group of people to start doing the research on who hasn't reported their information for their cryptocurrency. If you have not, or you choose not to for 2021, there is a high possibility that they will send you a bill. Now, cryptocurrency is new, and so they are still trying to figure out how to claim it, but I was on a webinar with actually an IRS agency who's working on all the new law changes. If you go into your Coinbase or any of those other systems, there is a place for you to download all of your transactions. Get that to your tax professional. They'll be able to calculate the taxes for it if it's a short-term gain or a long-term gain. My opinion, keep it so that you're not paying taxes on it. But there's different rules and regulations for that. So you want to make sure, though, that you're at least giving that to your tax professional so that they can make sure to file that properly for you so that you're not getting that bill from the IRS. Now let's talk about some key changes for business or self-employed people. Business meals. So the deduction for business meals has increased from 50% to 100% for 2021 and 2022. Now I love this one because a lot of us are working from home. And so before you only could do 50%. Now it's 100%. So all of your business meals are covered on your tax return. Qualified business income. Now this is not a new tax law, but I wanted just to tell people, especially those who, I think it was 60 something percent said they did their own tax return. So if you do and you're self-employed or a business owner, you want to be aware of this one because I know a lot of people aren't. If you're self-employed or owner of an LLC, an S Corp, or other pass-through entities such as a partnership, you can deduct up to 20% of your qualified business income. You have to qualify. There has to be certain professions that you do, but you do want to make sure that you're aware of this because that 20% of your income is already going to be deducted. The standard mileage rate for 2021 has unfortunately fell from 57.5 cents to 56 cents a mile. Now, of course, it's because we're not driving as much, but if you are something like a trucker or a salesperson or something of that nature, you do want to be aware of that because that is going to lower the amount that you can write off for mileage on your tax return. Net business loss. So small businesses can deduct a net trade or business loss of up to a maximum of $262,000. Now, I do want to make a caveat about this. It doesn't mean that if you deduct 100% $262,000 that you're getting a $262,000 refund. Not what that means. It just means if you have a huge loss for your business, you can deduct it, so you most likely won't owe any taxes. Do not look for a huge refund because you're deducting that. Employee retention credit. So businesses that maintain workers on their payroll during the pandemic can qualify for a tax credit for up to $5,000 per employee. Now, there are a lot of rules and regulations and qualifications regarding this. So if you're using a payroll system, Gusto or ADP or QuickBooks or anything else, go in there and look up this employee retention credit. There's offering the information, see if you can apply so that you can get a credit per employee that you kept hired during the pandemic. Retirement plans. So now this one is a key one because we are at the end of the year. So you do want to take advantage of this. If you're self-employed and you set up a SEP IRA, and if you haven't, please go do so, you can contribute up to 20% of your self-employment earnings with a maximum contribution of $58,000 for 2021. So if you are someone who is trying to lower their tax liability and doesn't want to just go spend a bunch of money, the most smartest thing for you to do is to get a retirement plan. There are so many small business owners who are so busy running their business that they're not thinking of the day when their child goes off to college and they can retire or something of that nature. You have to always be planning for retirement. The reason I say that is when you're a W-2 employee, it's easy for you to sign up for that 401k plan and it's just automatic deductions. But when you're a business owner, you're not thinking that far ahead. You need to be because you need to have some money so that at some point you can hand your business over to your kids, sell your business, offboard your business, shut down your business, or whatever you choose to do with it. So you need to have a plan for what you're going to do for your business. So myself as an S Corp, I pay myself as a W-2 and I have a retirement plan already set up. If you're employed by your own corporation, so for example, as I just said, an S Corp. So if you're an S Corp, you are employed by your own corporation. So you should be on payroll. You can also contribute up to 25% of your salary. So this is a great way to kind of set up a system for yourself for retirement. It's a great way to lower your tax liability. It's a great way to treat yourself as if, you know, your plans for your future for your business. So these are just some of the key tax changes for 2021. There are a lot of different ones, but I just want to go over these main ones. Now, here are some of the end of year tax strategies that you can do as a business owner. Now, for my clients, I'm always coming from the point of them being high income earners because my goal with my clients is to help them grow and succeed. So I'm trying to lower their tax liability because they made a lot of money. So I'm always speaking positively. So I'm going to go over strategies if you made a lot of money or if you're a 1099 independent contractor. A lot of times, if you're just getting 1099s, you're not going to have a lot of expenses to offset that 1099, which will cause you to owe a lot of money. Here are some strategies to help you with planning for the next 2 weeks. So the first one I'm going to talk about is expenses. So if you have recurring expenses, so examples of that would be Dropbox, Google, anything that you pay every single month, same amount every single month. Consider for the next 2 weeks charge any reoccurring expenses that you would normally pay earlier than usual. So for example, let's just say I'm paying for my Zoom subscription. It gets taken out of my credit card on the 3rd of every month. So that'd be January 3rd. If I want to lower my tax liability, I can just go ahead and charge my card for my Zoom today, which means I'm having an expense hit my profit and loss statement, but I don't have to actually pay that credit card bill until January. So those are just some ways to lower that amount. Other expenses, consider paying expenses with a check and mail them a few days before the year end. So as long as you've mailed that check and you have some type of proof with the date or something of that nature, you can put that on your tax return as a tax write-off, but it's not going to get cashed till 2022. Another thing that you can do is to prepay expenses before the end of the year. So such example, if you have a remote office rent space, consider maybe paying January, February, March, or any annual insurance premiums. Now, only do the strategies if you actually know what your income is currently, because you don't want to pay everything and then next year you don't have enough money to write off. So this goes back again to planning and make sure that you're reading with your bookkeeper, your accountant, yourself, whoever's working on that information, so that you know if you need to take advantage of these strategies. I just processed a huge bonus for my client to lower his liability as well. Income. So if you're a cash-based business, most small business owners are. That means that you don't claim your income on your business until you actually receive the money. So if you have good paying clients, don't do this if you don't. Wait until the end of the year to send out invoices. So you may have clients that you send invoices to on the 15th of the month. You can legally change the date anytime you choose to. So you can send those invoices out on December 31st, get paid in January, and you don't claim that income because they haven't paid you until next year. Okay, so that's something to think about. Donations. So I talked about this in previous slides. If you're a business owner, consider giving donations as a way to give back and also to take advantage of that 100% tax deduction. Now I want to go over some final tax tips for everyone. So I went through quite a few things today. I talked about some new things for 2021. I talked about a new document that I got directly from the IRS 2 hours ago. I talked about profit and loss statements, K-1s, different tax forms, mileage, all these different items that you need to talk to a professional about. I talked about it on the other slide, but I'm going to say it again. Your friends may know a lot of stuff about taxes, but your friends, your confidant, your therapist, your astrologist, your whoever, your neighbor, unless they are a tax professional, they're not going to know every tax item. And more importantly, they're not going to know how it's applicable to you. Unless you're sitting down with your friend and saying, hey, here's my W-2, my profit and loss. I have 6 kids. I want to retire and buy. Unless you're giving them all your information, they can't really help you make the best decisions for your business. As a business owner, I've been in business now 7 years next year. You want to get to that 5-year mark. 50% of businesses close down in their first 5 years. And the number one reason is finances, and lack of planning and operations. And it's because people are trying to go at it on their own. They don't want to hire a professional, or they're getting advice from someone who's not a professional. And then what happens in their business is they end up shutting it down because they don't have that information. Pay a couple $100, talk to someone, give them their information. We're legally required. You can tell us whatever you want, and we're legally required not to share that information with anybody else. And we're going to give you the best information. Also, when you talk to a professional, make sure they're the person that's right for you. So, and the reason I say that is, no matter what your profession is, you don't know everything. I don't know every tax law. I don't want to know every tax law. I am passionate about small business owners. I'm passionate about helping that subset. So if you are a C Corp with 100 employees, not my expertise. And so I say that because you need to make sure that the person you're talking to understands your business. So if you're going to an H&R Block or a Jackson Hewlett, they're not experts in small businesses. They're going to take the information that you give them and do your tax return. So you just want to make sure that for your business that you worked hard to start, or even for your W-2 that you're working hard to make money at, that you're getting the best tax advice and not just trying to go it alone. Because once you get those letters from the IRS, they're not fun. And once you get on their radar, it's hard to get off, okay? The other thing is, yes, talk to a professional, but increase your own professional knowledge on your tax return. Like, do some research, subscribe to some journalifications. If you own a restaurant, right, make sure you're doing restaurant information on tax tips or tax liabilities or new information. Join groups who's going to tell you about new tax laws, because then you can ask your tax professional, or you can do research on specifically what applies to you. So don't just take a professional's word for everything. You do also want to be knowledgeable about your own business. Prepare throughout the year. I can't say this one enough. You cannot wait till 2022 to then decide what you're going to do for your tax season. It doesn't make any sense. You cannot, there's a lot of things that you no longer can do. You can't go back and fill it. It's hard to go back and figure out what your mileage is. It's hard to go back to February of 2021 to try to remember what you took $1,000 out the bank account for. It's hard to then try to track down these independent contractors that you may have fired to try to get a W-9 for them. It's hard to try to go back and apply for grants and loans that you could have qualified for. So all these things, it makes sense to prepare throughout the year. It's never too late. We are at December 15th. We still have 2 weeks to get started. It's never a too late situation to make a decision to get started. The last thing I want to say is I'm an automation person. I love software. I love all things software just because it makes my life and anyone else's life easier. So yes, keeping all your receipts is amazing, but if you're using a software like QuickBooks or even Dropbox, and you can snap a picture and upload it and have someone calculate that throughout the year, if you're old school and still keep track of all your receipts, or you're using a software where you can attach those receipts and it automatically records for you, or you're getting these random documents throughout the year and you're like, where do I find them? And then now it's tax season and you forgot to claim that interest income, or you forgot that other job that you worked at for like 4 weeks in January, or all this different stuff. If you have a software program, it'll help you keep track. I think I mentioned briefly, but for my clients, I use a software that they have access to throughout the year. So whatever random stuff they get throughout the year, they can upload it securely. It doesn't go to anywhere but myself. And so I can look at it, I can do an analysis on it, I can understand it, and I can prepare them and explain to them, no matter how good of a tax professional you are, people will still get information and documents from the IRS. It happens. They make mistakes. I used to tell my mom that all the time about some of the mistakes that they would make. It happens. They're human beings. IRS people are literally human beings sitting at a computer. And so you want to make sure that your stuff is in place. So when you do get the IRS document, you're not ignoring it because they don't go away, but that you have a process in place. So if they're saying, hey, we see that you didn't give us our money that you owed us, you can immediately go pull that copy of that check, mail it off, and have a good day. You're not stressed about it. So those are just some tax tips that I want to go over. And then the last thing I want to discuss is just the next steps for anyone that is interested. So if you're interested in a tax consultation with myself, feel free to go to calendly.com/PKJ Consulting and then choose consultation. Or if you are on your mobile device, feel free to scan that first QR code. The other one, it's a tax checklist. So I know I went through a lot of different items. I have a tax checklist for people. It's $5. If you scan this other QR code, it'll take you directly to that tax checklist. It's on PKJ courses. Just look up tax course. And you have access to a checklist that will help you gather your tax documents. It's the ones that I give to my clients who don't love software. So I email them that tax checklist so that they can start using it to get ready for tax season. And then last but not least, of course, if you're interested in having me assist you with your taxes for 2021 or back taxes, feel free to send an email to taxes@pkjconsulting.com. And so I just want to say thank you to everyone who joined today. I am now going to look and see if there's any questions for me, but I do want to say thank you for those who may have to hop off. And I'll check the questions right now. So the first question we have is from Nia. That is a very great question. So Nia asked if Nia asks if she's salaried and she has a W-2, can she write off the home office? So if you are a W-2 and you're salaried, that's great. That's what you're supposed to do, right? What you should do is give yourself a reimbursement. So think of yourself as an employee of your business. You can reimburse yourself for your home office expenses. So that's what I do as myself. So I reimburse myself for my cell phone. Make sure you just create some type of document, and that's all you have to do as an S Corp. So you can reimburse yourself for home office expenses, supplies, everything, but you're just going to put it on your W-2 directly. So Anita, tax tips for nonprofits. Unfortunately, I did not cover that today, but feel free to reach out to me. I do 990 tax returns. It's such a different type of item. I mean, the main thing I'm going to tell you is just you want to make sure your tax professional understands nonprofits, because that tax return is 100% different than all the other tax returns. So feel free to reach out to me with any specific questions you have for nonprofit tax returns. Tiara asks a very great question about travel expenses. So if you use a business credit card to purchase gas during the trip, do you still write off mileage during that trip? So no, if you're using your credit card, well, yes, I'm sorry, let me answer that question correctly. Yes, you can write off the gas, and you want to keep track of your mileage because you can technically write off both. And then I had one question about live captions for those who have hearing loss. I apologize. I did not know that was a feature. I will definitely do research because I do want to make sure that that information is available for everyone. Were there any other questions? Perfect. Do I provide, so I received a question about providing support for a business in Colorado. So the answer is yes, I provide assistance with small businesses in all 50 states, and I even have clients as far as Costa Rica and Mexico. So yes, so I do actually assist. And if you are Spanish speaking, I have Spanish speaking people on my team. So yes, I do work with everyone. Even before the pandemic, I was actually a remote company. So I'd already built my company to do so because I'm passionate, not just about helping people in Las Vegas. I enjoy traveling. So I wanted to be able to help everyone. Great question. Is it more complicated when you have started your business mid-year and prior to that a W-2 employee? No. You can start your business today. So I literally set up LLCs for clients as late as tomorrow, I mean, late as December 30th. It's never too late. So you will get a W-2, right? And then when you start your business later on in the year, you'll have a W-2, and then you'll have your Schedule C or your 1120, depending on what type of structure. So no, it is not, you don't have to wait till January 1st to start a business. So it's never too complicated to start. So Melvin's asking what's the most important for LLC. I would need more specific information, but I mean, for me as an accounting tax business professional, the most important thing is keep track of your items. And actually, no, let me say the most important thing, especially if you're in startup mode, the most important thing is keep everything separate. If you have a business, do not use your personal credit cards or personal business stuff for your business. I know we all do, we're all guilty of it. I've done it, of course. But when it's important to try not to, because the whole point of having an LLC, S Corp, C Corp, all these different corps is to protect yourself from liability. So if you own a restaurant and you're commingling your personal and business funds and someone slips and falls and they sue you and they start to do research and they see that you're commingling, you're not operating like an LLC, you can get sued. And not only will they come after your business, they'll come after you personally. So the most important thing is get a business account. Put money in the business account and use the money in the business account. I would definitely say that would be the most important. Veronica's asking to show the website. So I will show that again. So So I have a question about a SEP IRA. So I would say it depends on if you're a W-2 employee or not. So reach out to me or let me know if you are one. LaRonda, so it depends on what you're purchasing. So if you're a W-2 employee, you can set up a 401k plan for yourself to better. Do I have any other questions? Yes, Veronica, I do assist with startups. Actually, startups is my passion. So if you're a startup and small business, that is my happy. There's nothing like for me personally, having a client who I worked with in their startup phases and helping them grow and seeing them flourish. That's actually my passion. It's something I've always wanted to do. So I have like a little thing from when I was in high school, and that's what I said I want to do is help business owners. Because a lot of times when you have a huge business, of course, you have a whole big team of professional people, but people need help getting from that 0 to like 2-year window so that they can start to become a bigger business. TR is asking a question about if you're LLC and pay yourself an LLC, it's illegal to do so, and people don't understand that. You cannot, if you have an LLC, pay yourself as a W-2. It's because you're double dipping. All right, so Arvia asked, should your business taxes be done separately from your personal filing? She has LLC, but I'm still working for a company full-time and she has a salary. So your business taxes, it'll be on the same tax return. You'll have a 1040 and a Schedule C. So just for those who don't know, on your tax return, there's a 1040, that's the standard. And then there's like Schedule A, B, C, D, E, like forever, it goes on forever. So there's a bunch of different schedules depending on how you run your business, like if you have rental properties or something of that nature. So you just want to make sure that you understand those different features. Any other questions? Thank you, Veronica. Thank you, John. Just want to make sure I answer everyone's presentation. Kanika, you want to start with June of 2021. But so depending on what your business is, and you can feel free to type that. If you got your LLC in June of 2021, technically, if you were running your business before then and it was the same type of thing, you can actually claim your expenses all the way back to January. So Tiara, so you have to be at least an S Corp. So just letting you know that, but feel free to reach out to me so I understand specifically what your situation is. She's asking about this thing that people do where they're an LLC and they pay themselves as a W-2. Unless you're a partnership or an S Corp, it's legal to do so because you're claiming something on the same tax return. If you don't get caught, it's one of those things with the IRS, if you don't get caught, you don't get caught, but legally you're not allowed to do so. But reach out to me specifically so I can make sure I understand specifically what your situation is. And that's why I said, I can go through all of these answers as best as possible, but each person has a different situation. And then also for every state, there are also different rules. So for example, if you live in Nevada, there's no state taxes. Don't move here though, because it's getting expensive, but there's no state taxes. So, when you're doing your tax return, you need to understand, you need to work with a professional who has experience with at least knowing the different state tax laws. So if you are in California and you know a friend who's in, Kentucky or something, they're not going to understand California's tax laws. They're on a whole nother level. So just make sure you're asking people if they do taxes for that state, if they're qualified to do taxes in that state. And if you do your taxes yourself, that's not a problem. But if they get complex, you can always have someone review your tax returns before you hit that submit button if you're using TurboTax or whatever the case may be. So I do have clients do their own tax return and they'll hire me to just say, before I push this button, can you review it with me? And it's not a problem. Any other questions? You're welcome, Mia. Yes, so Arvia just asked about doing your own business tax returns. Yes, you can. I just say, depending on your business, you just want to make sure that you're doing them accurately. TurboTax is a great software. I'm one of those people who say, yes, you can do anything on your own until you shouldn't. And if you know how to do taxes, if you're keeping your books up to date, you know all the tax laws, or you're running a very simple business, then yes, but you just want to decide in the long run, if there's something missing, or is there a tax write-off that you don't know? Is there something that I said today that you were not aware of? TurboTax may or may not be able to guide you if you don't push the right button. So if you don't answer the right question in TurboTax, it's not going to pop up and assume certain questions for you. So you just want to be cognizant of that if you're going to do your own tax return. All right, I'll stay on for a few other questions if anyone has them. I was asked about the replay. I don't know yet, but after I review, I will see if I'm going to release that, but feel free to email me. And I think I saw Janice on here. Hi, Janice. Janice, I actually work with Janice with a nonprofit. So E. Ford, are you referring to a nonprofit? All right, guys, I am going to wrap up. E4, if you want to E4, if you want to email me, if you're talking about nonprofit, feel free to do so. If anyone has any other questions, feel free to reach out to me. And if you haven't, congratulations, E4. Yes, so you need to form a 990 as a nonprofit. Thank you, Lois. I appreciate that. Feel free to sign up if you haven't for the next one. It's 8 Keys to Successful Business Startup. It's geared towards people who are in that startup phase all the way to 2 years. I've helped thousands of businesses. I love doing these type of webinars. I've directly helped clients go all the way from just inception, writing business plans, getting funding, getting successful, opening up their brick and mortar dream and making sure they're doing so properly. So I kind of learned some things that you need to be aware of. So feel free to sign up. And the other webinar I'm actually doing with SCORE, and I know a lot of you guys actually found me through SCORE from a previous webinar. So I'm doing another one. They asked me to do one in January for basic bookkeeping. So feel free to sign up for that one as well. And I just want to thank you so much, Veronica. You can feel free to email me, info@pkjconsulting.com. All right, thanks guys. Have a good, beautiful day. Thank you so much.